Sam, this is an unusual financial transaction. So you're raising money, but the investors are basically handing it over to you so you can go shopping.
Yes, basically, thanks a lot for having me on first, Ed and Sonali. It's a pleasure to be here. Basically, we're at a point where 2022 and 2023 were very good years for M&A with interest rates going up, uncertainty around the economy. For a serial acquirer like us, it was a good environment. We deployed our capital, did really well. And we went out to the market to get additional funding to execute on our pipeline. And we had the option to raise money through equity. But we had this offer from Coatue and Viking that involved a hybrid type of arrangement where they give us money and there's a payment in kind rather than cash interest, allowing us to preserve maximum liquidity to execute our pipeline and diminish the dilution. Given that we had such a clear way to allocate the capital, we decided to go with something like that because we could increase the value of the company and create more shareholder value that way and delay a little bit the equity financing.
Sam, tell us about the process here, because there are a lot of questions about crossover investors, big hedge funds in the venture capital space. How hard was it to raise money at this point in time, and why did you go to Viking and Coatue?
Yeah, well, Viking was already an investor in the company. They bought a 15% or so equity stake back in 2022 and 23, and then they chose to participate in this funding, backing us to do more of what we've been doing. And Coatue has this new crossover fund that suited our needs perfectly. For us, it wasn't hard to raise equity. I think there's a big divergence that's happening in the market between speculative growth and sort of quality. Valsoft's business model is around mission critical software and the serial acquisition of these small to mid-sized companies. The market is consolidating, and Valsoft has been able to build a global platform to be a significant player in that consolidation. The market participants appreciated that and wanted to be part of it.
Sam, what about the valuations you're seeing in the market? Presumably, they're still falling. So how are the pricing mechanisms behind which you're buying assets for?
So what we saw happen in the market is around 2022, mid-2022 and all of 2023, it was a good market for us. So we're like a value-based buyer. We're looking at buying things that we feel could be accretive to our shareholders. So with interest rates going up, private equity being a little bit more cautious, the private equity portcos doing a little less deals, it was an exceptional environment for us. Because we are cash buyers, we do deals on unlevered basis, and we saw a record pipeline, and that continues for now. But you could see, like with the rally that's been happening in the markets, we're starting to see a little bit more competition than we saw over the course of 2023.
What about the potential to go public? If you think about your own path moving forward and the rivals around you, the potential things that you could buy, are the public markets attractive, or are people preferring private hands?
I think for a company like ours, the market would be reactive. Like the private market interest is an indication of that. And I think it would be our plans to execute on an IPO potentially in the next 24 months or so, if the opportunity comes.
Sam, in the market, but also in your operations, I've got to ask, how's AI factored into all of this?
Yeah, of course, it's the jury remains out. I mean, I was reading about this new startup by Shamat Palihapitiya, the 80-20, where they're promising to build 80% of the features at 90% less of the cost. Our feeling is we deal in vertical market software, so the integrations in a specific industry are very difficult to replicate and give us a barrier of entry. Like we haven't seen any meaningful impact. We haven't seen any impact at all, other than the fact that it's enabled us to offer more to our customers for a similar price. And so far, it's given us some efficiency in terms of we support our customers. There's efficiency around that. We've seen the productivity of our developers go up significantly, and that's accelerating. The jury remains out. I think it's still not clear, but you could see a world where software companies become more efficient, and you could also see a world where software companies could become a little bit more commoditized, especially more horizontal companies.